Hello, welcome. This is video number 8 in the 10-minute video series produced by Ultimate Access, preparing you for the SEMA Operational Case Study exam in May 2018. My name's Sandy Hood and we're looking at the Manseco case study. Today's topic is from the Financial Reporting and Taxation Unit F1, and it comes from the non-current assets area within the second part of that syllabus. We're looking at IAS 38 Intangible Assets, and Manseco, of course, is central to our studies. So IAS 38 sets out the accounting treatment and disclosures to be applied to the recognition and measurement of intangible assets. These are intangible assets that are not dealt with specifically in another standard. So here you can see that if we've got assets held for sale, they are dealt with in IFRS 5. Goodwill, that's dealt with when we're dealing with the consolidation. Financial assets are in IAS 32. And others that we don't come across within our syllabus are to do with the exploration and evaluation of assets and development and extraction of minerals. So we are commonly focusing on research and development costs. Of course, they're not the only intangible assets. And here we treat them as expenses in the year that they're incurred. And we will only capitalise development expenditure provided it meets all of the IAS 38 criteria. So the first question is, what does capitalise mean? Well, it means treat it as an asset rather than an expense. So for it to be an asset, it must be a resource controlled by the entity as a result of past events and from which future economic benefits are expected to flow. And it must have a cost which can be measured reliably. So when we look at the Manseco accounts, we can see that research and development could well figure within the statement of profit or loss and within the statement of financial position. If it was, then we would be looking at items that may well be treated as cost of sales at the moment and adding them to intangible assets. So we would reduce the cost of sales and we would add intangible assets to the non-current assets. And of course there would be a little bit of amortization as we recognise the reduction in the value of a particular intangible asset over its life. Increased profit, increased total assets. So as the profit goes up, because there is less cost of sales, then there's more profit, and this will then be seen as an increase in the retained earnings, and effectively we would see that the statement of financial position would continue to balance. We'd have a higher value for intangible assets and a higher value for retained earnings. So what criteria must be satisfied to allow development expenditure to be capitalised? We tend to think of PIRET. Probable future economic benefits, intend to complete and use or sell the asset, and resources available to complete it. We are able to use it or sell it. It's technically feasible that it can be completed, and the expenses attributable can be measured separately, basically. So in February 2018, in the last set of exams, we had two variants. One was to apply the provisions of IAS 38 to determine how to account for development project expenditure. So clearly within that fairly regularly tested area of development cost. And the other one, explain how to account for a company's brand and a purchased licensed asset in the financial statements in accordance with IAS 38. So not quite the norm in terms of development costs, but definitely another aspect of intangible assets. So the pre-scene gives us plenty of clues, and here you are expected to deal with any queries regarding financial reporting. The company designs on the Manseco brand. So the design of products would give us a clue that IAS 38 might be examined. because there's a brand name. Status, yes, people buy them for the status that they get. So as such, it certainly isn't a tangible asset. It is intangible, but IAS 38 would need to be explored in order for us to establish whether something that gives the user or the consumer status could be included. Similarly, we're a good employer with many employees working for us for over 20 years. If that isn't goodwill, and if that isn't a sense of an intangible asset that's very valuable to the company, then I'm wrong, because it is. Investors love it. Investors will want to buy shares in a company with a loyal workforce because that particular company won't need to spend as much money on staff recruitment. And they know that if you've got a loyal workforce, then that's going to mean the company's going to be more profitable. And it's not going to incur the same sort of costs of staff turnover that another one might have. So they talk about our staff being our greatest asset. And here's the Goldman Sachs. Our people are our greatest assets. So it's widely agreed. So this is a substantial intangible asset for Monsanto. Absolutely. But as an intangible asset, it cannot be included in the financial reports. So although we recognise a loyal workforce is a good thing, it's not something that can be included in the statement of financial position. Here we talk about the conception of handbag designs, and again, this is an intangible asset, something that we can include in the financial reports. And investment in software, well, this is how they have got intangible assets within their accounts, and this is an investment in software would be treated as intangible. And here we have it. Intangible assets consist of computer software costs, and Monsanto's accounting policy is to treat software costs as intangible assets. So there you go. Gone down a little, hasn't it? And in here we've got some information about the amortization or impairment. We're not given the detail to know whether it's all amortization. There may well be quite a bit of impairment here. And also of intangible assets that have been purchased. Again, we know from their accounts that they only include software in intangible assets. So looking at the T account, we can see that the balance brought forward at the beginning of the year was 4.8 million. The balance carried down at the end of the year was 3.7 million nearly. They spent 1.2 or just over 1.2 million acquiring new intangibles, and they amortized, 2.4 million, or they impaired 2.4 million. So you can see that this is what's been going on over the year. They have fallen their reported value by 1.157 million. And that's a lot. And compared to the profit before tax, this fall is about 12% of the profit before tax. Compared to the intangible assets at the start of the year, it's almost a quarter. So let's look at a practice question. Here, the 50 Shades range, they're all grey, aren't they? 50 Shades of Grey, from Monsanto. And here we've got quite a wordy slide, so let me take you through it slowly. We know who we're dealing with, Anders Bukati. How we should account for the 50 Shades range of shoulder bags, totes and clutches. In January, we paid the film company just over $500,000 Llewellyn dollars for a license giving us exclusive rights to produce and sell the 50 Shades range worldwide for 10 years. This has been very successful so far this year. Well, we've had a few months of this year, 4, 5 by the time we get to the exam, and sales are much higher than our expectations. Similar film series have been popular for an average of 3 years, giving us an idea of how these licenses are going to work. Some have been popular for 7 or more years, and recent industry reports show our Monsanto brand is now the most recognisable affordable luxury leather brand in Lowerland. This is going to prove very valuable to us in the future. Please let me know the following. How much can we put in our financial statements for the year ended the 31st December for the increased value of our brand, and how do we account for the license that gives us the exclusive right to produce the 50 Shades of Grey range of bags over the next 10 years? Please include appropriate justification for your answers. So he's not getting at the development costs, he's getting at those other aspects of intangible assets. Identify the question, plan the answer, and check that the plan addresses the task requirements, and then quickly write up a series of short paragraphs. We've got about 4.5 minutes in order to identify the question and plan the answer. This is the very intense time. So we've got it here. How much can we put in our financial statements for the year ended the 31st December for the increased value of our brand? And how do we account for the license that gives us the exclusive right to produce the 50 Shades range of bags over the next 10 years? So both questions would typically be 1 out of 2 tasks within a 45-minute section, and they're worth about 12.5% together. And here we've got about 22.5 minutes, effectively half of a section. 8 good paragraphs would earn us 64%. And we've got 2 elements within this, haven't we? How much can we put in our financial statements for the brand, and how do we account for the license? So you don't need to remember any numbers from the pre-scene, but you do need to understand it so you can see where it's going. Planning time and then writing up time. Here's our blank word processing document where we are writing some briefing notes to Anders Bukati, and I recommend that you use this, and so does the examiner, rather than writing in the scratchpad, because that really is an additional task that isn't going to help in terms of managing the time in the exam. So there's our question, and we're straight in with the task, and in we go. Straight in. This recognition that it's IAS 38, that we're dealing with a brand, and we're going to go through the requirements of a brand to see whether or not it can be included. Now, I know and you know that as soon as you've come across one of these that doesn't work, you're automatically going to tell your boss you can't capitalise that cost. But from an exam point of view, I'm telling you that your examiner is expecting you to go through all the criteria. So look at it in terms of this definition of an asset and see whether or not it will fit. Again, the same sort of approach to the license, separately identifiable. I think that you can get quite a lot of marks out of the license part of it, particularly where you're looking well, in the first case with the brand, you're obviously recognising that it doesn't meet the criteria. The license does. It's got a distinct cost, and then it's going to be amortised over its life. And then you've got a chance to get those higher marks, because we've got these 3 levels of marking, but the higher marks would come when you're able to explain that the having capitalised the cost, it's then amortised, but exactly how long it's amortised for becomes a question that the board have to decide on, in the knowledge that most of these film based products tend to have a life of 3 years, whereas some may well go on for 7 years, but here we need to be able to make a judgment. Otherwise, we could be amortising this license over a longer period than it's really worth. So that would be a good way of earning some higher level marks. Right, after the plan, you make sure that the plan really answers the task. Sure, we've got the task here. We've listed 11 headings, and I think we've done a reasonably good job. So what do? We followed the process, we identified the question, we planned the answer, and we checked back that the plan addresses the task requirements. We haven't written up the series of short paragraphs, but within 10 minutes I think that there is a limit to how much we can do. What we didn't do was to use Pirate because this wasn't a development expenditure question. It was an intangible assets for brand and license. IAS 38 is one of many accounting standards listed in F1. The pre-scene provides plenty of opportunities, so just think of possible scenarios and then work your way through them in practice and get ready for this exam. Revise the standards and practice planning and then writing up your answers. Thank you very much, and I hope to see you for the next introductory recording. Goodbye.